Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Thursday, November 16th, 5:15 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we're in an uptrend since the back-to-back follow-through days on the NASDAQ and S&P 500 on November 1st and 2nd. You can see over here on the trend gauge, we've got leadership with the green arrow. Short term, all five of the major indexes are above their 21-day exponential moving average, so we've got a green arrow there. Mixed on the 50-day moving average, and also mixed on long-term moving average, as basically, in a nutshell, the large cap indexes continue to be okay, but we've got mid and small lagging. So what happened today? Minor gap down, but it's said that bull markets start the day weak and finish the day strong, and that's what we saw today, despite the second tight range day. Again, less than 0.75% from high to low on the S&P 500. Really, we've been consolidating tightly for almost 2.5 trading sessions now, so coiling for a move one way or another. If you're a bull, you are going to scream out right now, consolidations resolve in the direction of the primary trend. And yes, that's a fact, and that's what our expectation is. Expectations are not always met, but that's what we're looking for. But we do have a fly in the ointment. That is second day of weakness out of mid and small cap stocks today. Oils hit extremely hard, and financials hit both on news. A higher than expected oil supplies and supposed fee on banks to help shore them up should we have another regional banking crisis like we did back in March. And both of those news events hit those sectors. Combined, oils and financials are 23% of the small cap index. So that's your culprit for mid and small cap underperformance today. Here are the final numbers. Big Seven, positive on the day by about 1/3%, despite the fact that Tesla was down 3.8%. Elon Musk supposedly agreeing with what are perceived as some anti-Semitic comments on Twitter, and a lot of people in an uproar about that, and that's the supposed reason for the stock pulling back today after 3 strong days. The RG8 down about 1% on the day, and again, this is part of the weakness in mid and small caps. There's a reason for that. S&P 500 gap down, well, not really a gap, but opened weak, down 0.15%. Tight range all day. Bullish close, though, near the top of the range, up 0.12%. Equal cap, equal weighted. RSP lagged. NASDAQ 100 up 0.1%. Equal weighted NASDAQ lagged. Dow Jones Industrial Average down 0.13. Here's your weakness. Mid caps down a little over 1%. Russell 2000 small caps down a little over 1.5%. Global 60/40 up 0.15%. This was all bonds today, as global stocks down slightly, but bond prices up as yields pulled back. And yields, yields pulled back, and that was because of some bad news is good news before the market on jobless claims and also on Philly Fed. In-house GROTECTION positive by 0.06%. This despite weakness in 2 of our holdings, the mid cap index or the small cap index, and also Bitcoin gave back quite a bit of yesterday's gains, but still eking out a small profit here today. And let's get to the charts and then the tail of the tape. Here's the S&P 500 tight, 3 tight closes in a row. 44. Let's see, 44.96, 45.03, 45.08. Really tight range on the closes, really tight range. Let's go to a 15-minute chart here. And from from Tuesday's low, Late morning and mid-afternoon 44.85. That was the low, and the high 45.21 yesterday late morning. Very tight range, just a bit over 0.5%. And as I said, we're coiling for a move. One way or the other, you know what the bulls are looking for, and you know clearly what our expectation is if you listen to these videos. So all in all, bullish close. Leaders acting just fine after a bit of a pullback yesterday, a little bit of a continued pullback today, but some strength into the close dominated for leadership today. NASDAQ 103 very tight closes also. No change there at the top of the range. Putting in a little sideways consolidation at the top of a range, that's considered a handle. And that's always a pleasure to see. A lot of people calling for a fill of this gap here. That would feel pretty tough after the recent move up, but in the scheme of things, it would be just fine. That'd be a pullback near this 380-ish area, actually below 380. It would be 378.50. So that'd be about a 2% pullback, and that would feel harsh after the recent expectations that have been set with the bullish action. Dow, three tight closes right around that 35,000 level. Here's where things get weak. Mid caps back below the 200-day moving average after one close above, and similar three candle combo on small caps, but rejected at the 200-day moving average yesterday. Minor bounce off the lows toward the end of the day. So we really need the oils and financials to cooperate if mid and small are going to do anything. As I said, combined 23% on the IWM for financials and oils. Let's go to the VIX. VIX continuing to be tight, closed at the top of the range. Kind of the opposite of what you would have expected to see relative to what the index is doing, also closing at the top of the range, but up 1% on the day, still below this 15 level, which is what we want to see. The dollar, UUP, also closing at the top of the range. Again, three tight days, similar to what we're seeing on the indexes. Strength today in the precious metal complex, though. Gold gapping up 1.1%. Getting back to near the midpoint of this double bottom base, and actually a double bottom base that did not fail. Look, this looks like it's very wide action, but this trade's very tight and has a pretty low average true range. So never even hit during this pullback, didn't come close to the pivot minus 5%, minus 7 to 8% area. So that's GLD. How about SLV? Up 1.45%, although reversing when it hit that 22 level, and gold stocks 1.5%. Now let's flip to, well, let's start with Bitcoin because this was a bit of a disappointment today. Just can't get any follow-up strength, chopping all over the place. Kind of in a tight range, but trying to break out above 37,000 and can't do it, down 4.7% on the day. Now to bonds. Broad bond index up 0.6%. So not an abandoned baby, the dreaded abandoned baby here from Tuesday, as we had a gap down, now another gap up. So prices up means yields down, which is typically bullish for stocks. Let's go to TLT. Long bond into that 90 level, up 1.24%. So you're going to see a pullback in rates here. Here's the 30. Trending below the 21, below the 50, so a clear breakdown from that triangle that I've drawn a couple straight days. Won't draw it today. TNX also breakdown out of that triangle, down 2% today, challenging the lows from 2 days ago. So that is our inter-asset correlation. Let's go to the tail of the tape. You can pause this if you want to read the whole thing. I'll hit the highlights. Day count up 11 out of 13 to now 12 out of 14, including three tight closes. Some news I mentioned: jobless claims above expectation, Philly Fed in contraction. Both of those are bad for the economy, but positive from the standpoint that the Fed now 99+% that there's not going to be any interest rates in either of the next two interest rate increases, either of the next two meetings, and in fact starting to price in some cuts in the first quarter of next year. Let's see. How about sectors? Not a whole lot not a whole lot stood out. XLU. Well, by the end of the day, XLV joined XLU, and so did XLF, despite the fact that um, the banks were down. XLF is a little misleading because the biggest holding in there is Berkshire Hathaway, and it often skews what the actual banks are doing. Dollar tight on the day on the downside. Oils, staples, XLY also, which is consumer discretionary, and Tesla is the big gorilla in there. That's why that was down. Retail down as Walmart gap down. Bitcoin weak. KRE Regional Bank cybersecurity weak as Palo Alto gap down on its earnings report. Biotech also weak on the day. Only changes to the portfolio. We talked about our starter positions yesterday for DUOL and DraftKings. We added a little bit to each of those today, raising the beta up to 1.68. Bottom line on the day, second straight tight range for the S&P and the NASDAQ. Mid and small caps lag badly. I think I've covered that enough to explain what we're looking for. So let's go to a couple of charts, and we're going to go through the 12 holdings that we have, 12 individual names, excluding the leveraged index ETF. We've got QQQ, TNA, or QLD, TNA, and SPXL, addressing the indexes, BITO for Bitcoin. Now let's go here to the 12 holdings. We'll start off with Lilly. Continues to pull back, lag on a relative basis. We've got still a 6% size in this, considering diversifying that 6% size into 3% NVO and 3% Lilly, as long as they hold the 50-day moving average. Because if you look at NVO, looks like it had a shakeout yesterday and a bounce off the 50-day moving average. Nice update today, up 3.21%. This 100 level seems to be tough, an area for it to get above. And then again, that's a Livermore level, going back to reminiscences of a stock operator, and you frequently see that in round numbers like that: 50, 100, 200, 300, etc. So there's NVO. We don't own that, but as I said, considering diversifying into that. CrowdStrike, gap down, Crowd and ZS. And when you're in a bull market, try to give good stocks the benefit of the doubt, meaning don't sell them on the very first sign of weakness. You saw weakness right out of the gate today on CrowdStrike and Zscaler because of the gap down in industry group mate Palo Alto. So Palo Alto gap down, maybe got all of the sellers out. It closed near the top of the range, right into this 50-day moving average. And looking at the 5-minute chart, looks a whole lot of what, from a gap down and then rally standpoint, looks a lot of what you see in CrowdStrike. Of course, CrowdStrike much better action. You can see the gap down. Immediate buyers come in looking for the bargain at CrowdStrike off the 80 MA and that 200 level. Same thing for Zscaler, the other true leader in the group. Look at the 5-minute chart here. Well, this really didn't gap down that much and got stronger again in the morning before going sideways into the close. So cybersecurity lagged today because of Palo, but good action on Zscaler and CrowdStrike. CCJ, uranium theme, nice 4-day consolidation here after breaking above this 43 level. Excellent action riding the 8 EMA higher. Next up, Netflix, 4% position in this, and just continues to trudge its way higher. We took some offensive profits a couple days ago on this. Netflix said, I don't care about your offensive profits. We took it. One of the reasons was this pause around 450, which is a semi-Livermore area, but continued higher. We don't really worry about selling on strength and watching things continue higher, because when you think about it, when you sell and something starts to pull back, there's only one person that gets that high, and that's probably not going to be you. So the odds are things are going to continue higher. But with things being extended on the indexes and on some individual names, we did what we thought was the prudent thing. Sometimes it works out, sometimes it doesn't, but we did deploy that capital into other areas. After Netflix, let's go to Meta, META. Good action, bounce off the 8 EMA. NVIDIA, Started weak, had a strong close, closing at the top of the range, up 1.2% on the day. AMD had a pretty nice day after a weak day yesterday. Again, bouncing at the ADMA. You see a recurring theme here. Datadog continuing to rest. 3 tight closes here, very similar to what you're seeing on the indexes. Duolingo, we added to this today. When it came down near this 200 level and bounced. Nice consolidation here. Retraced back to the high volume close. That high volume close, you always, on strong stocks, always want to keep an eye on that as a reference point. It's normally provides support, and in this case, with the weak open, buyers did come into DUOL. DraftKings also added to this. This is consolidating 3 tight closes here also. And finally, Amazon and Microsoft. Amazon opened weak for the second day, undercut the 8 EMA, bounced at 140, reclaimed the 8 EMA, and finally Microsoft really, after the good reaction, great reaction actually, after yesterday's, or was it the day before? The days all run together sometimes, after their investor event. So all-time high close after that. So certainly it was positively received. Those are our 12 holdings. The one we would like to sneak into, if you make it a baker's dozen, Uber, but just continues higher, 3 tight closes, hasn't pulled back to a level that we're comfortable getting into. That's going to wrap it. As always, like to hear from you. The email is don@revereasset.com. Phone's 855-REAL-WEALTH. That's 855-732-5932. If you're interested in becoming a client, reach out to my partner, Dan Stewart, dan@revereasset.com. And as always, it's not how much you make in the market, it's how much of that you can keep. Right now, we're in growth mode, not protection mode. Market's healthy. You follow us each night. We discuss the differences between a healthy market and a weak or risky market. A lot of people say the market's going up, it's too stretched, that's where the risk is. No, we recognize the bullish action, and until that changes, we're on the bullish side. And with that, I'll wrap up the video for Thursday.